I was
So
absolutely
golf
shocked.
and Wicked. That was your weekend. Was golf and Wicked?
Yeah, I'm not exactly the gangster that I used to be. Now that you kind of sounded out like that,
Summer
that's a
out.
little less of
Yeah.
a baller
You were
weekend. It
cheering,
seemed,
clapping. Yeah.
yeah.
A
Sat on
lot of
the couch and took a
jazz
nap.
hands.
Jeez.
That's right.
Hung out with my little old guy dog. Geez, I feel 95 years old. But yep,
Yeah.
that's what I did. I golfed and went to a musical. And damn
Nice.
it, I'm a testosterone wielding man. I feel okay with it.
I feel good. Okay.
Well,
Yeah.
Jeff, that means you must be a millennial because when we were on, in Oceanside, my kids went to see Wicked. Well, we babysat the grandkids, and they all loved it. But they're a millennial generation, so I'm figuring you must be much younger than you look.
I'm just more into show tunes than it would seem I would.
Yeah, he just likes jazz hands.
It's give me a good
He's a sucker
showstopper.
for those. Yeah, he's a sucker for good jazz hands.
Oh, give me a rousing ballad, the best Peloton rides ever, and like it's freaking defying gravity. It's my output can cruise on that ride. It's the soundtrack of cardiovascular workout.
Hey, does
Charlie,
anyone have
wait, why are you driving across the country? Is this fun for you? Is this fun?
well, the driving is not fun, but
Yeah.
I'm spending 6 months visiting my children and having adventures because they're spread out around the country.
Okay.
And then I'm spending 6 months traveling Europe because I've got cousins. My mother was a Belgian citizen, so I've got cousins
Okay.
in Belgium, in Brussels, in Paris, and in Barcelona.
See, that
So-
sounds a lot more reasonable and fun.
And
I
as
think the
told-
first
I know.
part sounds like a children's book. I think that sounds like just
It's
it should
like
be
Charlie visits his family.
Just yeah,
And then
Charlie
along
in
the
the car.
way,
can
he has
do the whole thing.
hijinks, jazz hands,
Yeah.
and
Maybe has
The
a stuffed bear
snowstorm
that he
of the
brings with
decade.
him. They get into
Yeah.
hijinks. They maybe solve a crime in the sequel.
That's
they,
right.
Kind
There's
of
like,
flesh it
yeah,
out a little
there's-
bit.
it's true.
But,
It's
but
true.
I told Ben that I've rented a chateau that sleeps 14 in the south of France, near Pau,
Mm.
France.
When are we going?
Yeah, I invited everyone.
Oh wow. What month is that? What date are we showing up? What day are we showing up?
My guess is the best time would be September. I have it for
Okay.
September as well. That would be the
When
best.
when do you have it for? For how long?
July, August, September.
Look at that. All right.
Mhm.
What
Yeah,
town?
Pau, P-A-U,
Okay.
south of France, overlooking the Ardennes. I mean the Pyrenees. Sorry, not the Pyrenees.
Yeah.
But I'll be in Brussels for a while, and then I'll be in Paris for a while.
That'll
Travel
like a
to
banana.
Florida.
super close.
Hey,
Check it
and
out.
Robert is got to get the Trade of the Year award. He had a double in what, Robert, 4 days?
Nice.
Is he on?
Yeah, I sold too early. It's up even more now. God damn it.
Oh boy.
That was a pretty good trade though, right, Robert?
Yeah. I mean, it was only $100,000 profit, but the making 3 days was nice.
Nice.
Look at the whammer. Just holds her in the bat. He's not even going to trot her on the bases. Just another day at the office. Sure, the 4-day
That's
double
right.
worked for me. That's no big deal. Yeah. That's nice. I'm going to get killed on taxes.
And then I think last week we talked about fading Bitcoin and buying precious metals like gold and silver, and I think they're breaking out today finally. So
Really?
So I actually bought two stocks from the show last week. I bought Charlie's recommendation and then Ben's recommendation on National President.
All right. Well, I'm being told that we are live. People are starting to subscribe. I don't know if we're out there on X yet, letting people know that it's moving on. But good morning. It is Monday, December 9th. I can't believe that we're heading towards the end of the year. Today we've got Jeff Macke, Robert Marcin, Charlie Peabody. Good crew for you in the morning. Different sectors we're going to be talking about. Charlie, I know you're going to a conference, so can we talk a little bit about what you're doing, where you're at, why there's a blue room, what kind of hijinks are on on the horizon, And what are we going to hear about from you either this week or coming up here, given the events you're going to?
Sure. So this week is the annual Goldman Sachs banking conference, which all the major, money center and regional banks will be presenting at. And so we're going to get some sort of fourth quarter update from the management teams. I doubt we'll get a lot of guidance on 2025, as they're still in their budgeting process, but we may get some general commentary about 2025. Anyway, the bottom line is I don't think we're going to see any changes from the October guidance that we got on the third quarter earnings conference calls as it relates to credit quality, which still is proving to be manageable and stabilizing or normalizing, depending on what word you'd like to use. Operating expenses are going to be held well in check, maybe up 2% year over year, which is below inflation. So if there are any surprises in the guidance, it's going to come on the revenue front. Mm-hmm. And the two areas that people are trying to get their arms around is net interest income or top line revenues, and we're expecting that to grow in the mid single digits year over year. So somewhere in that 3 to 4 to 5% range. And it's a combination of modest loan growth, maybe 1% loan growth quarter over quarter, and stable margins. The real surprises, I think, are likely to be on the fee-based businesses. And there we're expecting pretty good strength in capital markets, which includes trading and investment banking, some strength in wealth management because markets are elevated, and some strength in mortgage banking. So those three areas have the potential to give us some positive surprises in the guidance that we're going to get here. The outlook for 2025, as I said, we're not going to get a lot of guidance. One other thing I should mention is banks are probably going to continue to talk about share buybacks because any sort of regulatory rules that were going to be imposed and constrain capital are not likely to happen under the Trump administration. So we're going to see banks continue to buy back 3, maybe 5% of their stock. And that's a fairly robust situation. And then dividend increases. If we get tax cuts sometime, by the second quarter of next year, we're going to get double-digit dividend increases in the third quarter of next year. So the bottom line is that I think the commentary for the fourth quarter and looking forward is going to be very, very constructive. Our favorite name remains Citigroup, which was the best performing stock last week and continues to be. I think it's up 40% year to date. But some of the regional banks that still retain value, because all these stocks have had a phenomenal run in November. So right now we're expecting is some consolidation going into the new year before we can resume the upward run. But some names that near term I think have some value are Citizens Financial, CFG. And then a new name that I haven't mentioned in the past that's starting to gain some institutional attention as I've talked to players is Truist, TFC. And the reason that Truist is starting to gain some attention is they have a 4.4% yield. They trade at less than 12 times earnings, which is low for the banks today. Sure. So it's emerging as a total return player, and they just started buying back stock. They're buying back about 3% of their stock, and that program just started. So it's emerging as a total return name. In addition, this is a stock that was a company that was formed through the merger of BB&T and SunTrust 5 years ago. Management promised all sorts of benefits from that merger. They've not been able to execute on it. But there's a sense that finally there's going to be a self-help story where there's going to be some expense saves and efficiencies as that merger comes together. So if we get any kind of improved revenue for from the Trump actions, we've got an expense structure that could be fairly stable. So positive operating earnings is being talked about. So those three names are worth looking at: Citi, CFG, and TFC.
Okay. Well, that's good to know. And so definitely come back to us after the conference if there's anything else going on that we should know about. Are you going to the conference, or is just going on and you're kind of getting your tidbits from it?
No, I will be attending, but via Zoom. I mean, I'm not going to be in person. It's a competitors conference, so I'm not invited.
Like you're not allowed. Okay. And
But
Robert,
on
you've
your,
got a new name for us. And Charlie was telling you, congrats there. People probably caught that on one of your recent names. But so if you've got a hot hand, what's on for today?
A lot of things. If I mean, honestly, if you have small caps and you're not up 30% in the last 2 months, you're lagging. If you
Yeah.
don't know in financials, it's everything's moving. So I'm not going to declare victory in a massive bull market, but it's nice to get the first 50 to 100% in 3 months. Makes the trade hard to screw up. You know what I'm
Okay.
saying? So I got two updates. I got a surprise update on a bigger cap stock, but the first one
Yep.
is Koru Medical, which I've talked
Okay.
about here a couple times, and that was quite controversial because I think it was trading about 50,000 shares, 60,000 shares a day, and it with a 250 price, you're not talking about a lot of dollar volume. So some wondered whether that's worthwhile when you can't do anything. And I was lucky enough to accumulate almost 1% of the company. There's 86 million shares, so you could do the math.
Yeah.
Um, Over the last 6 months, at about $2.35. So I'm happy. The stock's pushing $4. They've only had one good quarter.
Nice.
That's not the news. That's the setup
Okay.
to the.
All
They did a
right.
they did a presentation at Piper Sandler, and these guys make it's a mechanical crank driven pump that delivers drugs through your stomach or your body fat, just like your Ozempic. Except there's a lot of volume of this stuff, and
Okay.
people have a choice of doing it in IV form or doing it subcutaneously.
Mm-hmm.
And um, the news that shocked the hell out of me, and I have a call into the CEO today to see if this is accurate. She stated on a call that there's 1,000 drugs being prepped for subcutaneous delivery versus IV.
Okay.
So if that is true, right now they're doing 35 million in revenue. The forecast, the financial target public is 60 million in 2 years. So to go from
Mm-hmm.
35 to 60 million in 2 years is pretty good. And then in another 4 years to go to 200 million to triple the business. That's their
Okay.
targets.
All right.
So they're doing this business on 7 drugs, something like that, and there's a
Mm-hmm.
thousand being ready. So apparently, there's a lot of drug companies are starting to take their IV delivered drug formulas and reformulate them and get approval to have them delivered, through subcutaneous
Okay.
infusion. So if you look up IVs, they take 30 minutes to days, they say on Google, but mostly hours. And they just sit there, gravity drip. And I don't think people want to sit there with a needle in their vein for 3 hours while they get a treatment.
Sure.
If they can do it in 20 minutes or 15 minutes with a
Sure.
subcutaneous. So if this is really correct, their numbers, this company could grow 25 to 30. If that is true, this company can grow 25 to 30% a year as far as the eye can see. So it's 5 times sales today. It's not a cheap stock, but I've got to look into this. If that's the
Okay.
short, the conference was extremely bullish. I have never seen the CEO with this level of
Excitement.
positive body language. For the short,
Okay.
they raised their market growth short term, and they talked about the long term opportunity being far better if the drug companies start to do this switch. And the issue with subcutaneous infusion is that it was just never used before, and now
Uh-huh.
people are discovering. So what happened was they got it for a very narrow indication, and a clinic in Europe, I think it was France, started using it for regular cancer treatments off label. And it's sort of like spreading like wildfire over in Europe. And these guys are like, "Holy shit, we have something there that we didn't even think about. We did this for home infusion, and now it's better for the patient and for the nurse or doctor who's doing the delivery to not do a handheld injection that takes 10 minutes with tremendous pressure on your fingers." So this business has the potential just to totally change from a niche product to
Okay.
we used one.
Or
So
well-used one. Okay.
that's,
All right.
hey, that's a home run story for a value guy. I don't buy the
Sure.
30% growers. I don't buy the Palantirs of the world. This is my Palantir, okay?
This is your
So the other one is Skechers presented last Thursday or Friday, I think, and they started off
Okay.
saying the knock on wood, things are wonderful so far. So the stock, which was 59 2 weeks ago, and I was thinking about buying more stock, and it's now 72. It's only $2 above an all-time high. So when the CFO starts singing jingle bells on the call, you kind of think they have something going on for the Christmas quarter. So keep your eye on that one too. Jeff, just reinforcing the Nike donating share to everybody theme.
Absolutely. That's been a gorgeous trade all year. I actually put a basket together just for the hell of it. Skechers, Adidas, Crocs, OnCloud, and Deck. And man, that has been a smoking heater of a basket all year long. Well, Nike's down 25%. That you could just get long.
And you're winning on both sides of the trade too. Both sides.
Yeah. It's you pay for the shares with the Nike that you're short, and man, you're off to the races. And you listen to Foot Locker talk. Is there more traction on that trade? I don't know. Foot Locker is openly telling you that things are great everywhere except Nike, which is just wildly promotional. That's 40% of what we sell, so we can't get shit going, despite the fact that we're selling the other stuff full price. So I think that trade still works. I think Skechers works. Like just a basket, anything you put on your feet that doesn't have a freaking winged logo of victory on it, and you are aces.
You are. That's funny. Did you say aces or ASICs?
You're aces. You're crushing. It's buy. Figure out a way to buy aces.
It was a
buy
joke.
Anything you can buy Crocs. I know it was a joke, but I'm serious about the trade. And so are Crocs. Crocs are a joke, but I'm wearing them right now, and the stock is going higher. So
what color?
I've got blue ones on. And I just got new Argyle ones for the holidays. So they're kind of flannel on the inside. Yeah, Cozy has a new name, and it's my shoes.
Jeff, you're a shoe snob, and you wear Crocs is impressive. So that's
you're not a shoe snob, Macke. I don't think you're a shoe snob, are you? No, that's Ben Bry. If he's listening.
Yeah, Bry is a shoe snob. Bry's
got the Gucci with the loafers with the tassels. That's a totally different element.
Yeah, and just huge clodhopper feet. He has like a half a cow of leather in every shoe that he puts on.
Yeah. So Macke, what do you? I know that you're talking about the strong discretionary run here. What are you looking at today?
I'm a little like Robert. There's the temptation to say, "Geez, I'm really good at their stock picking game," but the consumer discretionary group has just been absolutely on fire. And pick a name, and it's going higher. Except for one that I'm looking at for a trade they report tomorrow. It's Dave & Buster's. And the idea here is not that things are going great. That stock hasn't really moved in 4 odd years when you get down to it. But it's a rare commodity these days, which is a reasonably priced name that has a little bit of a consumer tailwind all of a sudden. We're seeing traffic better than expected in the mall. I think one of the deals that's been driving all these stocks to the downside, you look at kind of boring companies that are crushing the Build-A-Bears that we saw last week, these kind of super hyper discretionary names where people don't really need to go to Dave & Buster's, but if they're out in the mall, it's a decent place to have lunch. They're going to pick up traffic just as a function of what the consumer's doing. The consumer's better than expected, and I think that gets Dave & Buster's through this remodel plan that they have over the next couple of years, and they're going to get their comps to turn around. That's what your real story here is if they can get their comps to even come close to positive, if they can just asymptote it flat, it'll be the first time in years. They're really improving on their operationally. They're getting more out of every dollar people spend, but that's not enough after a while. They need traffic ultimately, and that's where I think the trade is. If they can mutter anything about the traffic coming in better, whether it's through the remodels or just through taking a chunk of the people out there. We've seen Cheesecake Factory do it. There's no reason Dave & Buster's can't. This is just a hangout place that is going to on the bleeding edge of consumer discretionary. No one needs to go to Dave & Buster's and pay $50 for a dinner that they could otherwise have at home. But it's kind of nice. It's a nice place for, to crash with the kids if you don't feel that worried about them running up your video game bill. And no one is that worried. The economy's better than expected. Also looking at Restoration Hardware, our friend Gary Friedman reports this week. Now that stock's up 50% since he kind of envisioned a world where people would one day buy furniture again. It didn't sound like the kind of news that would drive a stock up 50% higher, but that's what has happened in the last 3 months. We get to hear Gary on Thursday. It's always a trip. It's always worth listening to just for the holy crap, what's this guy going to talk about for 2.5 hours type of thing. But in this case, if we're seeing a consumer that's really turning, if it seems like the spending's a little better than expected, it seems like the store volume and velocity is better than we've seen or had reason to expect. And you saw that with the Black Friday results. You saw that with Cyber Monday. Everyone's buying just a little bit more. And so I'm looking for companies that benefit from that. Dave & Buster's is a good pick for me. Restoration Hardware, I don't know what the hell they got going on, but it's kind of a trip to listen to. And in either of those cases, if the consumer's picking up, you should be able to see it there. Gary Friedman, the CEO of Restoration, should be able to see that turn actually happening in a way that they can report with financial numbers instead of his feeling.
Can I come back to you on play? Would
Sure.
you be long into the quarter, or are you
I'm
waiting
long
to
it right
hear
now, and
results?
I'm kind of looking. I'm long it right now. This is going to be. They're going to get the comps to turn, or they aren't.
Okay.
And
Okay.
so I see the downside is about 30. I don't think there's really a huge risk of this being a disaster quarter. Whether or not they're able to, in terms of me getting confident and wanting to stay long this thing,
Uh-huh.
it's. I think it'll be a trade once the comps start turning positive. By the time you see that, it'll be too
Okay.
late to buy the stock.
Too
It'll
late.
be up
Yeah.
20%, and so that might not happen tomorrow, but it could happen in 3 months. If I'm right about the thesis, and that's basically that this company's not going out of business, and they generate enough cash to make it worth your while in a lot of different ways, that'll pay off in the next 6 months or so. So if I wasn't
Okay.
long already, I'd add to it this morning. Otherwise I'm just going to chill and listen to the call tomorrow and look for trades off it.
Okay. Yeah, I just was wondering. Sometimes going into an event, you want to wait and see what cards get put on the table, but you're pretty comfortable going into the
I'm pretty
quarter. It sounds
comfortable.
like.
I see a lot of support. They can do a buyback. Again, they generate cash, and it's small enough that they've got different programs they can put in. I think they buy the crap out of the shares at 30 over and over again. That's what they have been
Okay.
doing. That's what they will do. That gives me a nice downside. I don't expect any news. There's not much
Yeah.
risk that they're going to go through that. And again, if comps are starting to stabilize, if they're seeing better results from the remodels than they expected, you're going to have a stock that's going to be over 40 before you can really get long or get involved at all. And so I like
Right.
the risk reward. At 30, I'm a huge buyer. Right now, I'm a watcher.
And what I like about this is there's like the self-help aspect to it, the different levers that management team can pull. But what worries me on your other trades, just from the like perspective of how does somebody trade this, is that how long is that pathway for a Skechers or some of these like the non-Nikes, right? Is it how do you know when you've made your money shorting Nike? You said a little bit about it, which is, Foot Locker saying you just can't sell that stuff. But when is the news out fully in the stock such that you either just need to take these trades off, right? Or go the other way eventually because things have, on one hand bottom out so much, or on the other hand just made too much money. So how do people, what should people be looking for to figure out where they are, other than obviously listening to Wall Street Beats and you and making
Sure.
sure they get that action going, right? But what do they look for?
It's when we talked about this Nike trade for the first time. It was earlier in the year, and so they've blown up. And to your point,
Right.
it's a lot of the money's been made, and they're still going to be Nike, so they're not going to go out of business, but they're going to continue to try to sell us Air Jordan based stuff, which no one really wants, and that's going
Right.
to keep getting marked down. I think the easy money's been made on the short side. The fact that Nike
Mhm.
responded so well to those Foot Locker earnings, when Foot Locker really, as the number one strictly athletic shoe peddler
Right.
in America, tells you that your business sucks, I'm inclined to take their word for it. They didn't use it as an excuse. They just said, listen, we can't do anything. Dan Telsey's been out bagging on Nike. Everyone has been already.
Yes.
I think that it's really an upside play right now. It's
Okay.
For me, I'm mostly long. I'm less bearish on Nike than I am just optimistic on the space being good. Because again,
Okay.
it's really hard to even analyze this industry ex Nike because they're so damn big. There's
Right.
$150 billion athletic wear out there, and that's them. So that's I think we're made it on the short side. You got to see what that new CEO is going to do. He's not going to do anything fast. I mean, this is a
Right.
company that's paying Caitlin Clark
Yes.
$8 million a year. She's earned every penny of it, and they don't have a shoe. It's like,
Right.
I've got
So
a
stupid.
thought. I've got a turnaround
Yeah,
plan
yeah.
for
Like,
you.
how can you not have a shoe to market to all
The
the
most
people out
famous
there?
women's
And there's going
athlete
to
in
be
history.
men too who like would actually probably buy like a cool shoe related to her just to support the cause. Think of all the dads, right? Your
Oh
daughter
my
plays
gosh,
basketball. Like,
yes.
there's so many angles to this you could do to make money, and yeah, nothing going on.
I mean, Nike's entire business model is based on the idea that professional athletes, when they're operating at this high a level, are really marketable. That's the
Right.
entire idea. That's what they paid her for. Come out with a shoe. Make a shoe
Yeah.
for the woman. Give her a shoe.
Get that woman a shoe.
Damn it. I mean, not just the
You
contract, get her a
I'll
shoe.
Skechers. You sell Skechers when they get a respectful PE to growth rate. That's it.
Okay.
Yeah, I mean, they're
Respectful
cheap.
PE
They're
for
making
a
the
non-respectable
cash.
shoe.
Oh, you could have bought Skechers at 12 times earnings 2 weeks ago. That's a disgrace. The market's pooping on that management.
And these are
All
still
right.
14, 15. I mean, I talked about Resto before. That's 70 times next year's earnings based on
Oh,
Gary's
God.
kind of vision of a vector of the future. He used the word vector double-digit times last conference call. That's not a word you use in conference calls. But that's 70 times earnings. So in that type of world, I'll take even busters and just kind of hang out and go to the arcade while I wait.
All right. Well, listen, make sure to wear your plaid Crocs for that, because that'll be a picture I want to see.
Everywhere I go.
Well, listen, it's 7:24 here on the West Coast, 10:24 on the East Coast. That's it for today for Wall Street Beats, December 9th, 2024. We will be back at you tomorrow. What's up, Robert? You have something to say?
I have something to say.
What is it? Okay, we're not done yet. Robert has something.
So we're not done yet, because and I'm not done yet.
Okay.
And you understand what I mean. I do a lot of cycle work, right? Pattern work, right?
All right.
As to create a template for the stock market. And everybody does the stock market by seasonality, quarters, presidential cycles, the sunspot cycle, that kind of crap. But there is an interesting development in that most people use the presidential cycle, just don't make any distinguishment between whether it's a new or an existing administration that wins an election. And it surprised me to see that it's very different, the outcomes in the following year, the first quarter, especially the second quarter in the year. So if you subscribe, I will share that information with you, perhaps next week.
Look at that teaser. Little holiday cookies there for you. Little crumbs going in there.
Everybody just does the president.
Robert,
Yes.
if you do cycle work, the cycles are lining up very bullishly for precious metals here. And I don't know if you've noticed, but this morning they're up 4 to 10%.
Yeah,
it was something I highlighted last week is that
That's
we're
right.
moving
You said
into
gold, talking gold, talking. I think you're talking silver too. Talking about silver.
Absolutely. And one of the names that's a little more speculative. I mean, you can play. If you want the mainstream, you play Agnico Eagle or Anglo Ashanti, AU or AEM. But one of the more speculative names that's a small cap stock, Robert, that might be up your alley is Highcroft Mining, a silver company.
He's throwing a cookie right back at you. Look at that.
Yeah, look at you guys.
If it's as good as your last idea, I'll have it in my portfolio by 10:35.
I'm there, and I have a decent sized position. So.
All right, thank you, Charlie.
Awesome. Well, that's a good note to end on. Thank you, everybody, and we will catch you back tomorrow here on Wall Street Beats. Subscribe. Obviously, you want to be a member so you can get some of that amazing intel that Robert and Charlie are talking about here today, as well as Macke. Thank you. Bye-bye.
Bye.
Thanks, Nadine. Thanks, Jen.